YouTube. And here we are back at it again for our afternoon session with you and I and Lee too.
All right,
Let's
get that adrenaline going, man.
Did you set that?
Let's get that adrenaline going. Is that what this?
Adrenaline.
You got to refresh the feed, then you got to go from the feed to the feed.
Back at it again.
Here we are.
Welcome to our live. Who's there? Let me know who you are.
Macho, Mitchell, Hayden. What's up, guys? Great to see you. We are now teaching you how to buy a house in 2020.
Oh, hello.
He says, hello. What's up, guys?
How do you know it's a he?
I don't
Because
know.
it starts with
I
he?
don't know. But
does
I
start
do
with
know the rates are
He hat.
5 point. What are they?
What up, Camacho?
What are they? What's up? So we're talking about the rates and we're talking about the down payment assistance programs and the different ways to get your credit up. And what's going to go on with the markets, because tomorrow could be a crazy day. Could be a crazy day again.
Say why. Say why.
KK's in the house. KK's in the house. Well, right now, the uncertainty is back in the market. And because of that, the spread from the 10-year yield has gone up, which means interest rates are up. Now, that doesn't mean that the whole market has gone up. It just means in the moment, interest rates are responding to uncertainty.
Mr. H.
But when the Fed speaks again, because they're going to speak again, they're going to actually do an assessment of the Fed minutes this week. And with this, there could come certainty back in the market. If they say something like, hey, we think there was a momentary glitch, but we still believe we're on course, then boom, the thing will start going down, and you'll see the uncertainty spread disappear. You'll see rates come down just a little bit, but it hasn't. The real stuff hasn't really happened yet. Mm-hmm. The real stuff hasn't happened until the Fed says, hey, listen, we're willing to change the Fed funds rate. Right now, the Fed funds rate is 5.25 and 5.5, but that they've anticipated 3 basis point drops in the year 2024. I don't know what you're talking about. What are you doing?
Just keep right on it.
Yeah, they're anticipating. Oh, I got it now. They're anticipating 3 basis point drops in the year 2024, which is dramatic. That's a lot. So you've seen interest rates go up recently. They've spiked just a little bit, and the reason they spiked is because we anticipated CPI to come in about 2.9%, and it didn't. It came in at 3.1, almost 3.2%, and because of that, the uncertainty went back into the market. And rates responded by going up as much as 50, 85 basis points in some cases, which is 0.5%, almost a full percent. But some big numbers are coming in. Tomorrow, earnings come in for a few people. There's going to be there's new reports coming in this week, which if they show that solid and the Fed says, hey, this is good stuff, then they're going to continue on their path. And by the way, they haven't been very erratic. They've been pretty predictable. They've been saying, hey, listen, we're going all the way up to the peak. Once we get to the peak, we think we've reached the peak. And now we think we're going back down. By it coming back down, it's called a pivot. Once they start the pivot, now rates start coming down. We think that happens third quarter. We believe it happens third quarter. I know what the Vegas has been saying. Vegas, for a long time, thought it was going to be March. But we've been saying for a long time, third quarter. And the reason is we don't think we got control of the economy yet. And they know, the Fed knows, they're going to have to make a lot of people go through unemployment. Cool. What do you got?
All right,
so
you
all
guys,
kinds of good stuff here.
You guys are here for one reason, and that's for real estate and mortgage information. So if you're ready to get pre-qualified, screenshot, got a phone number here. Screenshot, got phone numbers here. Or if you're ready and you don't want to talk to us, go straight to the link up top where it says stand.store. Fill out your application, and we'll get someone, either Lee or myself, or one of our fabulous team members to help you guys out.
KK in the house. What's up, KK? We always love seeing your name. You're so great.
I love it.
So great to see you.
Let's go to these questions.
Okay, we got questions. We're here for you. We are on Facebook, Instagram, TikTok, and YouTube. What's up, Navy? Mom Donna, good to see you. So, somebody said here, or asked,
going to 1.07. Biden trying to approve $60 billion for Ukraine.
It's crazy, man, how much money they're putting out. But the thing they ask about NAV cash. So if we use NAV cash, does your realtor still get their commission? Yes. Yes. Nothing changes. Actually, something changes. There's 2 escrows, so there's a little bit more fees for you. But because you use NAV cash, you have the power to buy cash. That's the big thing.
So you heard 3%. Yes, yes. So NAV cash is a strategy for you. Everybody still gets paid. Okay, don't worry about everybody getting paid. Worry about you actually getting a house, because the competition is starting to come out. Now that the rates kind of bumped up a little bit, you know, the competition kind of goes down, but it's coming. It's absolutely coming. And the NAV cash is how we solve the competition and you getting your offers accepted. So it's a big deal, bigger than most people know. Talk to your agent about it. Have them call us. You call us. We'll figure it out. We'll get you guys into a home. Now, all that being said, Lee
What?
Duran, the finance man.
What?
Tell them what's going on with the new news that we received.
What new news? So,
this is not even
are we
real.
good? Are we good? Are we in New York?
Are we in New York?
Are we doing business in New York?
Are we?
Yes.
Okay, what else? What
We
other
do
good news
business
we
in
got?
all 50 states. All 50 states. And we have the ability, like the zero down programs. Oh my God, there's some weird ones out there. Like the big one, NAV Cash. Everybody's talking. I'm not Cash. Dream for All. Dream for All. Dream for All will give you 20% of your purchase price. 20%. Sounds great. Sounds amazing. Till you read the fine print.
Barbarette, he's talking to you.
Yeah, Barbarette, here's how it happens. So let's just say you're in California. Hey, I want to buy a $500,000 house, but I want one of them down payment assistance programs. Well, if you haven't owned a home in the last 7 years, and your parents
Oh, God.
never owned a home,
Your mom, your dad.
your mom, your dad,
I don't know if your dad's alive. They'll find out.
Like his dad walked out on him when he was 2. He doesn't know whether or
Yeah,
not.
can I use this
I
program?
know, yeah.
I haven't spoken to the guy.
Did your dad own a home? I don't know.
We don't like each other.
When do we talk? When's the
Clearly.
last time you talked to him? So, my dad walked out on me when I was 2. So same thing.
Trying to
Same
show
thing.
off
Yeah,
now.
I'm trying to flex.
Misery Injuries
Yeah,
Company.
we love. So anyway, you want to buy a $500,000 house, and the state of California says, hey, you know what? We'll help you out. We're gonna get you $100,000. They didn't say we're gonna give you $100,000. They said we're gonna get you $100,000. So, if you meet all the requirements, and you put your name into a hat, and they pull your name out of the hat, now you get the wonderful privilege of being in business with the state of California, because they said, you know that $500,000 house, we're going to give you 20%, get you 20%, we're going to get you 20%, so that's $100,000. Boom, we're putting $100,000 on that house. When I say we, I mean we. I don't mean you. No, I mean we. We now own this house. What do you mean, state of California? What do you mean we? I mean, I want that $100,000 back at some point in the future. Wait a minute, you want it back? I thought you were giving it to me. Oh no, I get it for you. I didn't give it to you. You're crazy. You're smoking something. So, not only do I want it back, I want it back with interest. No, scratch that. I want it back with appreciation. Appreciation's better in California. So, as your home appreciates, I want my piece too. So, let's get this clear, Mr. Home Buyer. I'm going to get you $100,000, but I want it back, and I want it back with my appreciation. Oh, and I'm first in line in the event that everybody doesn't get paid. I get paid first.
Is that the Jen Tuttle?
What?
The
What?
photographer
What?
of the world?
Of the world, the best photographer in the history of mankind, bar none. Nobody even comes close.
Since cameras were invented?
Uh-huh.
Dang. Honored.
Hey,
Sorry.
Lee, didn't you have an insurance firm in Victorville? Yes, I did.
Need for speed?
Need for Speed. Yes, we did. We had insurance. That was 20 years ago. Was it 20 years ago? About that, huh? No, 15 years
Ended in
ago.
08, 9.
08, 09? So
Yeah,
about
15 years
15,
ago.
16 years ago.
Damn!
Yes! We got a lot of good stuff
What happened
going on.
with that?
What
Life,
happened
my
with
man.
that?
Life.
Yeah, life happened, man. I don't know if you know her, but there was a big crash in the financial business.
2008?
Yeah, 2009, 10, 11, 12. Yeah,
Truth
big
now.
thing. It was all
Some people are still reading
It was all in the news. I don't know if you heard it. People lost their houses. Business got destroyed. You know, just the fun stuff. No real stuff ever happens every time. Yes, I've had a lot of businesses, and we did have one in Victorville. We're now down in Riverside, but we do business in all 50 states.
All right.
Uh-oh.
We got some questions up here,
All right,
guys.
cool.
Got some questions.
Yeah.
Barbara, how can I get a home with no cash down? You just explained that. I'm
Yep.
in West Virginia wanting to own a home. In Ohio, never owned a home.
We want to help you.
Barbarette.
Yes.
Barbarette.
Yes.
So, what's your FICO score? And do you know if your parents have ever owned a home?
Yeah.
Okay. That doesn't disqualify you from all the programs, just one. Because there's a lot of programs that we can definitely qualify you for.
Cool.
Mr. H, if I flipped a house with an LLC, can I still qualify for a first-time home buyer?
If I flipped a house with an LLC, well, if you didn't actually own it and the LLC did, that's probably going to be under the LLC. But if you've owned a home in the last 3 years in your name, then you don't qualify for first-time homebuyer program. But don't let that discourage you, because there's only probably 2 or 3 different first-time homebuyer programs. FHA, 3.5% down, is not a first-time homebuyer program. It is a primary residence program. So that's where we're at.
All right, dude. Every time I think
Dude,
you're
we
going
got
to
so
go on a
many
run,
questions we can't keep. Yeah.
well, every time I think you're going to go on a run, I move, and you're like, I'm
Cool,
done.
yeah, I know.
Do you have wholesale?
Do we have wholesale? Do we have wholesale? What does that mean? I don't know what that means.
I think they
yeah.
mean, can we extend them a line so they can broker through us?
Yeah, you would have to talk to New American Funding.
Talk to the bosses,
Yeah,
man. I'm
there
just a worker
have
bee.
a lot of branches powered by New American Funding. I think that's going to be it right there.
Okay, here's a
Yeah,
good
but
question.
we're the loan officers. We don't. Yeah.
This is a good
Cool.
question right here. Britt Porter, is it better to have more income or better credit?
Well, more income to a point, and that point is when you hit your purchase price sweet spot. And then after that, better credit. So if you're trying to buy a $500,000 house, you need to have a certain amount of income. If you're set on $500,000, it doesn't matter how much over that you make, you need the good credit.
Uncle Lee, Uncle Chris.
What's up? Now just take your word for real estate. Oh, Need for Speed. Dude, oh, we got a hater in the house, I think. No, not just take my word for real estate, dude. Vet me. Check me out.
Insurance is winning.
Everyone.
Insurance,
But everyone
you can kill it in
is winning.
insurance.
Well, yeah, you can. We were dealing with EIAs, equity index annuities, a lot, retirement type vehicles. We weren't selling property and casualty per se, but I still got the licenses, still got H&L, still got PNC, securities license, mortgage license, all of those things. I don't know if you want to take my word for it, but I'll tell you what, I'm here if you want to. Need for Speed. Love it.
Hope you guys are doing well.
Thank you very much. We're great to see you too.
Do you have any programs you recommend? Said Barbarette. As a matter of fact, yes.
Okay, good. Tell them.
We have an in-house program that will pay for your down payment.
What?
That will go down to a 600 credit score.
What?
That will allow you to max your buying power.
What?
It will be FHA.
What?
So your buying power is stretched to its max limit if you need it to be that way. So yes, we absolutely have a program in-house that we can help with. Barbarette.
Yep.
Need for Speed, did those weird, crazy faces.
Yep, Cray.
Never trust who talk too much, and these two exaggerate.
Oh, Need for Speed's a hater. We love you, man. We love you.
Welcome to the party.
Yeah, welcome to the party, buddy. Welcome to the party.
Barbarette, I'm 589 right now, and neither of my parents owned a home. All right, so at the moment, you can get into a home. We can start with the 580. There's different programs that we can get you into. So you need to reach out to us and see if we can put you in a home.
Yeah.
Barbarette.
Okay, cool.
He had TEM 3. I would be a first-time home buyer. I'm ready to start the process.
We're ready to help
So
you.
what does a
We're
man
ready
like
to help
this
you
do?
like that. If you need a badass loan, call a badass loan officer. You can reach a badass loan officer at New American Funding. Chris and Lee's personal cell phone numbers are on the screen right now. You can text us or call us or anything, but don't do a horror live because we're not going to answer. This will disappear in 5, 4, 3, 2, 1, bye. Cool. Cool. There's there's some crazy stuff going on. Though.
What?
Diablo, I'm a broker. All right, Diablo.
Brizoker.
All right, good. So, broker, hey, let me tell you something. Brokers, okay, cool. So I get this question a lot. What's better, a direct lender or a broker? And here's my take on this, Diablo Mortgage. You give me your take, and you tell me if this is correct.
Taco plate.
Okay? So, brokers have the ability to broker. So when the salesman comes up, they're like, hey, I can shop 15 different places, which is true. But the part they're not telling everybody is at the beginning of a quarter, they have to choose how much commission they make off of broker A, broker B, broker C. So if they say, hey, I'm making 50 basis points on broker A and I'm making 300 basis points on broker Z, now they get to choose where they send it. So is it true that they can shop it? Yes, it's true that they can shop it. But it's also true that they get to choose how much they make depending on who they shop it to. Because after you package enough loans, you know whether one is going to go through or not. So there are pros and cons to a broker. Here's the pro. The pro is if this branch didn't take it, this broker line didn't take it, I can just pull it back, not even repackage it because it's already packaged, and just send it to somebody else and get it approved. So there's the pro for the broker and kind of the con for the broker. The direct lender is a little different. When we come on board as a direct lender, we don't get to choose our commissions. We don't even get to choose our rates. We put into a pricing engine and we get this rate. Now, we do have the ability to broker. And sometimes, like Wells Fargo, sometimes Wells Fargo will come in and even beat our lines. So there's that benefit. There's that benefit of direct lender. So people say, which is better? And I'm like, not really one or the other, but the one thing you should look for is somebody who's playing long game. Somebody who's not trying to make 300 basis points off a loan. That's a lot of money. That's a lot of commission on a loan. If you find somebody who's trying to put it out there, build a long-term business and help you long-term, well then that's the better way to go, broker or direct lender. You tell me what you think.
Taco plate.
Taco plate.
That's
All right.
the best way to go. Camacho, how can I get the cosigner off my account without refinancing?
So there's a way to do that. And say account, if you're talking about the loan. So when you had a co-borrower, either occupant or non-occupant co-borrower, you both qualified for the loan together. If you're asking the bank to get rid of the non-occupant or occupant co-borrower, well then you have to say, hey Mr. Bank, I can afford this entirely on my own. There's two ways to do it. One of them is refinance, which the broker, the loan officer and the bank will all make a commission, and you get rid of the old loan and you start a new loan. That's clean. The more difficult but probably better for you way is called an assumption. And you have to call your bank servicer directly and say, hey, listen, I'd like to assume this loan by myself. And then they're going to put you through the underwriting process. And if you qualify and the bank allows it, they get rid of the other person, and it's now your loan all by yourself.
Booyah! Ashlyn, why doesn't FHA use the entire amount a travel nurse makes and only the taxed money?
You take that.
Okay. So what you're talking about, you say only the taxed money. It sounds like that you are self-employed. Okay. It sounds like that they're using the bottom line, which is the net number. That's actually what you took. So your top line might say $100,000, but your bottom line might only say 60, and that's because you said I had $40,000 in expenses. Mm-hmm. So they take that $40,000 away because you didn't get to put that in your pocket, and they only use the 60. Also, you should know that when you're self-employed, it's a 24-month average as long as it's ascending. Okay.
Maybe Mom Donna says again.
Yeah.
How many times are you guys going live
7.
today? We're going 7 times.
I want you at all of them.
All of them. Be sure to be there for every single one. We appreciate you guys on Facebook, Instagram, TikTok, and YouTube answering your questions to help you get a home in 2024. What do you got for me, man?
So it's a 24-month average. It's not something that you just use the current income. So it's because of the way you file your taxes. What I'm going to recommend is call us. Let us iron it out again. And there's something going on right now that it's the perfect time for you. It's tax season. So if you need to make an adjustment to this year's taxes, that's all you need to do. And we'll make it work for you, travel nurse. Corbin's. Okay, I'm going to call you guys.
Appreciate
Sweet!
you very much.
Where in California are you located?
He's right there. I'm right here. Riverside, California. But we do all 50 states. Riverside, California.
Kit Kat. It's backwards.
Yes, it is. But if you wait about 30 seconds, it'll flip around. The real simple, logical thing is we have 4 cameras launching for all the social medias, and some of them are flipped and some of them aren't. So our way of solving that is real simple. We got it straightforward and then we flip it around. So depending on which platform, it will be backwards for a second, then back forward.
It's only backwards for some. Diablo Mortgage, only if you're correspondent. He's talking
Okay.
about your broker thingy.
Okay.
Jesse Rodriguez, you guys were right. I got approved for $475,000 on 109 income with $45,000 down. Can go up. 24 years old.
Let's do it.
So
Very happy for you, man. Very happy.
We give you that answer, Jesse Rodriguez? Did you call us?
We're here for you. We knew a Jesse Rodriguez once.
What do you mean once? I still do.
Okay, go.
Double down. Do you guys do 203K loans?
We do 203K loans. Yes, we do. They're very, just so you'll know, it's not an easy loan. It's a very difficult loan because there's third-party people involved, and there's a general contractor and someone who has to prove it and a manager. But yes, we do 203K loans. They do help you. So if you want to do one, we'll do it.
What the hell is a 203K loan?
203K loan usually piggybacks on an FHA loan. Usually can piggyback on something else, but usually piggybacks on a 203 an FHA loan, and it allows you to fix up something that's wrong with the property. So let's just say you wanted to finish another bedroom that wasn't there and needs to be finished. You can get the 203K to do that, or put windows or do something else in order to make that home livable.
Yeah, you're welcome, Barbarette. Chasing Life Dogs, multifamily loans. How are they working now?
If you can find the unit, if you can find it, they're amazing. But here's a little breaking news. Every single 20-year-old kid who just got out of all of them. They just got out of high school, got out of college, they got out of a seminar, they just saw Tony Robbins for the first time. Whoever their real estate guru is, they're like, hey, you know what? I got a little secret in my brain.
They start with bro.
They're gonna start bruh.
My bad, bro.
They say bruh. Yeah, hey bruh, I want to get a 4-unit, and I want to live in one of them, and rent the other 3. Am I shrewd? I am so shrewd. Oh my God, I'm so shrewd. And we're like, yeah, you can do that. They're like, yes, I knew I was a genius.
I went to a seminar.
I went to Tony Robbins seminar the other day. He said I could do it.
I'll take 2 of them.
Yeah, I'll take 2 of them.
Sign me up.
So, can that be done? Yes, it can. Have we done them? Yes, we have. They're great when you can find them. They're great. But that's the catch. It's when you can find them. Because every single 20-year-old kid out there is thinking the exact same thing, and they're all searching for it. And they're like, hey, I found it. And I'm like, okay, great. Let's get it under contract. Hey, guess what? And I'll tell them this. You can use the 3 units that you're renting in order to qualify you for it. They're like, yeah, but I don't have any income at all. I don't have a job. I'm just a real estate investor. So if you can find them and the scenario works, it's a genius scenario. I think it's probably one of the best out there. But it's hard to find that multifamily unit in order to make it happen.
Make it happen, though. JHarp06. I have a mortgage late on my first home. How long do I have to wait to buy my second home?
Okay, so if you have one late, just one, no harm, no foul. Probably be able to buy your second home without a problem, because in order to get qualified for your second home, you're going to need a minimum 700? Second home, I think it's 720.
720 somewhere.
720. You probably think it's 720. You'll need a minimum 720 FICO. If that late got factored in and you still have a 720 FICO, you're good to go.
Yeah.
And we're going to have to write an LOE. What happened?
What's LOE?
Letter of explanation.
Wow.
So.
You know a lot.
I do. So, letter of explanation, we're going to say, hey, my bank closed down and I didn't get the payment off on time. Okay, cool. Then the underwriter's going to go, oh, yeah, that happens. Wells Fargo closed down? Never mind. So, whatever. It happens if it's 1. If it's 2, you're probably dead in the water.
That's my dog's fault.
Because, yeah, they forgive 1 kind of on a mortgage, kind of sometimes, but it will get factored in. At 2, they're like, no, that's irresponsible. We can't give you another note because you have shown that you're not good with that. Cool. What do we got?
Jesse Rodriguez, you said buyers with that? What are you talking about?
Buyers with that. Jesse, we want to help you.
Double down. Can you qualify with rental income?
Can you qualify? Yes, double down. You can.
Is that what you were just talking about?
Well, no. So if you did a 4-unit, the 3 units that you have on the side, you can use those to qualify for the loan. However, let's say you don't have a job at all, but you have 15 rentals, and those rentals bring you an income. If those rentals bring you an income and that's your primary source of income, I need to see your tax returns, your Schedule E's. I'll be able to figure out exactly how much you keep, and then off how much you keep, I'll be able to build your qualification. So you can qualify with the 3 units or just as having rentals.
Okay, what are the down payment assistance programs for Texas?
Texas is strange because it's so big. It's so big.
How big?
Very big.
That sounds big.
So what's the biggest state in the union?
Texas.
No.
Alaska.
I got you.
No, you didn't.
I got you.
No,
Pretty. And plus, Texas.
Alaska.
Texas might not even be in the union anymore.
I said it.
Texas might be leaving. They kind of the writing's on the wall. The relationship's not working out. Texas is thinking about saying, you know what, this has been a good run, but I think we need to see other countries. Bye. I think Texas is thinking about that. Anyway,
See you, Texas.
Texas has a lot of different down payment assistance programs depending on the area. Like I live, my primary residence is on Lake Travis, and that's near Austin. So there's programs in there. But if you go down towards Dallas, and you go up towards. You're right.
Dallas.
That's pretty good. Okay, if you go up towards Dallas, there's different programs there. If you go down towards San Antonio, that's down.
That's down.
Okay, good. If you go down towards San Antonio,
If you go further down,
if you go further down, you're wet. You're gonna get wet.
Houston.
No.
Houston.
I don't know how to tell you this,
That's the dirty South.
dude. You don't want to talk
Dirty.
about? Oh, dude, you're
Dirty.
gonna create some enemies here.
Dirty,
Don't do
dirty,
that.
dirty.
Don't do that.
Dirty.
Don't do that.
I love it.
Cool. What do we got?
H-Town down, homie.
We got a lot of questions here. We're trying to catch all your questions and help you buy a house
right.
in 2024.
Better hope they pass an inspection, Ryan says.
We better hope they pass.
Ryan's kind of a genius.
I know. What
I'm
inspection?
just going to say.
What inspection are we talking about?
I don't know, but he's kind of a genius.
Mm-hmm.
He's talking about the buying units. That's what he's doing. How do you say this name? Froncius?
Froncius Rema.
I found a house that I'm using VA loan. I'm supposed to pay $7,000 for closing costs.
All right. Congratulations, I think. So let me give you a little bit of advice on those VA loans. A little bit of advice. First off, make sure you have a skilled VA loan officer because it's a very specific loan. Mm-hmm. It's not FICO driven. It's something called residual driven. Residual is a special calculation on the back of a VA loan to make sure the veteran can support themselves and the family. Secondarily, there's a few things that you cannot get over on a VA loan. Like, for instance, you cannot waive termite. The VA mandates termite. It's the only mandate that is in the loan system is the VA termite because they want to make sure the veteran doesn't move into a termite-infested house. Secondarily, the most expensive and only downside of a VA loan is the VA funding fee, and that can be very expensive. Very expensive. 3.6% in some cases. So 3.6% of a $500,000 house, well, that's close to $18,000.
Dang.
And if you have an inexperienced VA loan officer who doesn't know your service connected at 10% or greater, may pull your COE, which is Certificate of Eligibility, and it may say non-exempt. And your non-experienced VA loan officer doesn't know to send in your paperwork and make sure it comes back exempt, and you pay $18,000 that you never needed to, and nobody will ever know you paid it the wrong way. Not even you, not even your loan officer, nobody. You need somebody who knows what's happening. So,
sounds like a chump.
Dude.
Is he a chump?
I don't know.
Okay, whatever. With multifamily, do they use your income to qualify?
With multifamily, they use your income to qualify. Yes, they being the bank.
Holy cow, Mateo followed the host.
Mateo might be in the house.
Mateo
Is
followed
that
the
our
host.
Mateo?
I don't know.
Is that our Mateo? We'll find out. He'll tell us.
Diablo Mortgage wishes.
I wish.
Me too,
I wish.
Diablo
Me
Mortgage.
too. Me too.
Barbarette, I found a duplex. Will they allow you to purchase that as a first-time homebuyer with repairs?
So, yes, sometimes. If you found a duplex, it depends on what the repairs are. By the way, make sure you have a good realtor. If you don't have a good realtor, it will cost you way too much money. Really good realtor. Here's why. A lot of people think, well, I won't pay that 3% to the realtor. And you know what? It sounds good on the surface, but it's really not.
No buenos.
Yeah, if you walk in, like I walk in with a realtor, an experienced realtor, and they'll walk through the house, and I'm like, yeah, this is a pretty nice house. There's some good rooms here. And they're like, yeah, but did you see the master bedroom had a whiter ceiling than the other rooms? And I'm like, so?
Racist much?
Yeah, racist much? No, you don't understand, Lee. People don't just paint a ceiling white. What happened? Oh, there was a roof leak. And they repaired the roof leak. And then they repainted the house. And now I need to get up there and make sure that there's not a roof leak that you're going to find out a year from now that you have to replace a roof. What? All because the ceiling was whiter than everywhere else? What? Now, you go with a good realtor and they walk to the house and you're like, hey, the paint's cracking in the corners. And you're like, yeah, paint cracks. Yeah, that's what happens. You're like, no, that's foundation issues. Okay.
The house shifted?
The house shifted? You mean the foundation could break? That's not a cheap fix. Like $10,000, $20,000, $40,000 to fix that kind of stuff. Or you'll go into the garage and you'll see some stained concrete. And you're like, yeah, whatever, stained concrete. No, that's been water sitting there for an extended period of time, which means plumbing problems.
What?
Yeah, there's now a lot of these can get caught on home inspection. They can. But if you have a good experienced realtor, they know what to be looking for.
Hell yeah.
Anyway, moving on.
Do the Chads get mad when the triplex doesn't appraise?
Do the
I
Chads?
think so.
The Chads get mad when
I
the
think
tri-
they
yeah,
do.
Yeah, they
Tom
do.
Jones is following us, man.
Tom Jones, dude, that's
Lala,
it.
Lala in the house. What's the highest loan I can get in a single family with $78,000 income in California?
In California, depending on your tax base, I
You know
would
they call
say,
California California?
what?
California.
78K you would probably start around 350,000 and go up from there. It's going to depend on your tax base, your insurance. There might be an HOA that we have to, depends on where you're at in California. So certain places in California has a few good things really going for it. And one of them is Proposition 13, because our tax base in California is 1.25 as a rule. It goes up and down a little bit, but 1.25. The only time that gets really strange is new builds, because new builds play dirty birdie
They're
games,
ridiculous.
man. They play dirty birdie games.
Like 1.7.
Like dirty,
3.9.
dirty
I don't know, somewhere
games.
in there.
Dirty games, man. I'll tell you about the dirty games in a second, too.
Dang.
I'm going to tell you about them. They're crazy.
Jesse Rodriguez needs to know if it's rare to work with tribal income.
Oh, no, we work with tribal income all the time. In fact, sometimes it's mind-blowing how much money these guys
Yeah.
make. Mind-blowing.
Awesome.
I had this kid come into me one time. And I was like, okay, so how much do you make? And he goes, $18,000 a month. And I said, $18,000 a month? And he's like, yeah, $18,000 a month. And I'm like, from where? And he goes, it's my tribal stipend. I'm like, cool. Do you have a job? No, just the $18,000 a month. Can I qualify? And I'm like, I'm sitting there back going, $18,000 a month? Okay, how long is this going to go for? For the rest of my life. $18,000 a month? Yeah. So we live around San Manuel here in the Inland Empire, and there are some very big incomes. Yes, we actually deal with them. There's a program that's specifically sponsored by the tribal facility, Shinoa. It's not just for tribal, but it's sponsored by tribal, and it's a pretty powerful program. So yes, we deal with them. Yes, we've done them before. Yes, we can help you.
Right. Dennis the tech guy.
Cool.
I received an FHA pre-approval. Are you 99% good? Question mark. What can get in the way of making it to closing?
Well, first off, if you're pre-approval, so we all lenders, well, not all of them, most lenders use what's called DU, Desktop Underwriter, and then there's LP, which is Loan Prospector. Now, we go by the term GIGO, garbage in, garbage out. So if you put bad data into the underwriting system, you will get a false positive. The only way for you to actually know you have a really good, solid pre-qual, TBD underwrite.
Boom.
Actually go through underwriting, submit it to the underwriter. They will calculate your income. They will come back and you'll have an underwriter with a chum's number underneath their name, and they will say, I have underwritten this file. Now you're at 99% good. Now you're at 99%. But if you got a pre-qual, if you give an inexperienced loan officer, brand new, and everybody was brand new at one point, but when you give an inexperienced loan officer, they'll put the numbers in to make it work, and it may not work. It's not as 99% as you think 99% is.
Dang.
So, cool.
Minerva wants to know if you work with Texas residents.
Texas. I love Texas residents.
He loves
My
them.
favorite.
They're his favorite.
My favorite. My primary residence is in Texas.
Did you guys know that?
Yep.
You guys didn't know that?
Cool.
That's BS.
Dennis the tech guy.
I'm in College Station, Texas. J Sharp 06.
Love it.
Where's that at?
In Texas?
Where?
College Station.
By where?
Dude, are you
Where you by,
not
Jay
are you not nothing? Are you not
Where
knowing
in
nothing?
Texas is that? The
Are
north,
you
the
not
middle, the
knowing-
south, the left, the right? Come on,
Make
let
sure
us know.
you buy a car right before closing, says Mateo.
Boom, good
That's,
job.
He's he
Good
probably
idea.
is a loan officer that's
And
not going to make it as a
furniture.
loan officer. Yeah. He's a loan officer that's not going to make it as a loan officer if he's a loan
Buy
officer.
everything.
Yeah, buy everything.
No, don't do that, guys.
buy a car right before
Don't do
closing.
that.
Yeah, don't do that.
Amber Julie, any knowledge of HUD 184 home loans? I think that's the tribal, right?
Not sure.
I'll Google
Off
it.
the top of my head, I'm not sure.
Ryan said he'll buy it cash.
Ah, Ryan, cool.
Mateo-
$1 million. Is that
Mateo-
the same Ryan?
Yeah.
Is
Mateo
that the same
doesn't
Ryan?
know
$1
that
million.
Ryan's a baller.
Ryan's a baller, man.
don't know.
Straight baller.
And what is this that
Jamie,
gave
Jamie's
us?
giving us. Those looks like claps.
Is it this?
No, I think she's giving us claps.
Oh.
Dude, you got to
Thank you,
take some
Jamie.
claps on the.
I don't know.
Jessica, thank you for following. We appreciate you guys. Make sure you get the questions on Facebook, Instagram, TikTok, and YouTube. Oh, I forgot to lift this thing
Chasing
up. to YouTube.
Dogs needs to know if you know a good agent in Central Texas.
Yes, we do. Central Texas. Shoot, I'm closing one right now with a killer agent named Bianca. Her badass. She's badass. Yeah, but we know a lot of we do deal with a lot of agents, and So if we're looking for an agent, we have a group that deals with top producers all across the country. So I say, hey, listen, I need somebody in Houston, Texas. Let's say I didn't know somebody in Houston, Texas. I go to my top producing agent and I say, hey, listen, I need an agent in Houston, Texas. And my top producing agent will give me like 2 names, and she'll say, hey, call this person. If that doesn't work, call this person. Here's their numbers. They have closed 15 transactions in the last 14 days. They closed 180 transactions last year. Then I'll call them and I'll say, hey, my name's Leader Animal Loan Officer. I have a client ready to go shopping. I am considering allowing you to help my client. Do you have the time? They all say, well, yes. Okay, are you going to farm it out or are you going to handle it yourself? Well, Lee, I'm going to handle it myself if you give me a pre-qual buyer. I'll say, perfect. I'm going to check in with you and the client, okay? My fiduciary responsibility is to that client. So I am going to help that client with everything. If you're really good, you and I are going to get along great, and I'll even give you more clients down the road. But if my client isn't happy, I will replace you. Are we clear on that? Well, Lee, you're kind of tough. I said, not really tough, just fair with my client. Are we clear on that? Yes, cool. Then here's an introduction to my client. So now my client gets a top producing realtor who is being watched to make sure they got my client's best interest. That's how we actually vet realtors all across the country.
User 7867 said, good advice. Have to run it through DU.
DU.
Talking about TBD.
Yeah.
So the answer is no, it's not just ran through DU. It's actually gone through by an underwriter. The underwriter's actually gone through the file to bless it themselves. Because DU could give you wrong data if you don't input the correct data. So it has to be looked over by a human being called an underwriter, and the underwriter makes that decision. So it's actually a step further than that. User 7867. Ryan, how close is someone to closing if they have a conditional approval?
Well, that's a very trick question, and it is a sleight of hand for a realtor, for a loan officer. Here's why. Let's say that I got you a conditional loan approval, and the only condition is you have to come up with $20,000. We don't know where you're coming up from, but you have a conditional loan approval. Conditional loan approval. Pay off the car for $18,000, and then you're approved. That's a conditional loan approval. Now, theoretically, if you're getting towards the end, it won't be that dramatic, but it can be that dramatic. It can be. We have conditions that say, hey, you're going to pay off these 17 debts in escrow, which come up to about $50,000. Make sure you have that $50,000 in escrow so we can close them at escrow. That's conditional loan approval. So it depends on what the conditions are.
So the answer is a step away from closing.
Yep.
Because once you fulfill those conditions, whatever they are, could be just a paycheck stub.
Yeah, sometimes it is.
You get something called clear to close, and that's the next step.
Yeah.
And the next step is you signing docs and funding this bad boy.
Yeah, most of the time the CLA is a good spot.
Where you guys based out of?
Riverside, California. We do business in all 50 states, but we are based out of Riverside, California.
Adrian said, cash bonus for buyer versus a guarantee. What'd that mean?
I don't know.
Okay.
Adrian, help us out.
My name Jeff, 69. I like that. Do you technically have to put a down payment for a home?
Technically, no, nothing. EMD is earnest money deposit. It's kind of good faith, and it can be zero. I've closed many loans where the good for the EMD is zero. However, imagine this. You're the seller, and you're saying, hey, listen, I'm going to sell you my $500,000 house, $500,000 house. And you go, hey, Mr. Seller, I'm serious about this, but I'm not going to put any money down. But I'm serious, but I'm not going to put any money down. And I want you to take it off the market for the rest of the world to not be able to buy it. But I'm not going to put any money down. If you were the seller, would you do that? Most of the time they don't. So there's some kind of EMD that's negotiated by a realtor. By the way, that's a very tricky question because some people walk in and go, I'm going to show I'm really serious and put $20,000 down. I'm like, I don't know if you should do that. Check with your realtor. Check with your realtor. Why? Because if something goes wrong, if anything goes wrong, that's what's on the line, 20 G's. So if something goes wrong, I just had one recently where they put $1,000 down with the builder. And they said, Lee, I don't like this. Not my client at first, but is my client now. They say, Lee, I don't like this. And I say, cool. They like, I'm very, very uneasy with this situation. I say, cool, how much EMD did you put? She goes, I put $1,000 down. How long ago? 90 days ago. Cool. If this thing falls apart, are you okay with losing $1,000? She said, yes. And I say, cool, that's your max downside, $1,000. She did lose $1,000, but we got her into another house that she actually wanted probably within a week. Yep. And we're closing on it like next week, right? Ready to close?
No, we're about to, yeah.
Now we're about to close. So we got some good shit, dude. Just click the end button. What is going on? What is going on in this world?
I knew it, Amber Julie. It's a tribal loan. I knew it.
Yes, travel loans, loans.
That's a HUD loan. We do all the HUD products. Absolutely, Julie. You got to give us a buzz.
Yep, we're here for you.
User 2364, 670 FICO, $170,000 a year, $40,000 saved, 0 bills, 0 car payment, 0 house payment, just phones. Pretty good job.
$170,000 a year with $40K down. So, I will tell you, off your income, you're probably in the $780,000 range, $800,000 range.
Heck yeah.
Somewhere in that range.
Good job.
The barrier to entry is going to be your down payment, because FHA is going to be 3.5% down. For a $300,000 loan, you're going to need about $10,000. For $600,000, you're going to need about $20,000. Then you're going to need closing costs. I'm going to say your $40,000 will put you in the neighborhood of 6 to 7, but your income will put you higher. Woo! So somewhere in that range.
I love it. Ryan, I always call the seller's agent and brag about my client in multiple offer situations.
All right. Good for you, Ryan. Ryan flexing, man. You're like, hey, I'm badass at this shit.
I'll tell you how it's done.
I'm going to teach you.
Fernando, I want to refinance. When do you think would be a good time? What's your goal?
So, yeah, that depends on what your goal is. If you're trying to get everybody wants a lower payment. So don't say that my goal is a lower payment. Everybody wants a lower payment. Oh, yeah, by the way, I want $20,000 cash out.
Oh, I want that too.
Yeah, I want a lower payment and $20,000 cash out. Can I have that?
And a submarine
sandwich. So, if you're thinking about refinancing your forever home, you should be watching the markets. Listen to us, that's fine, but watch the markets, because this whole thing works in a cycle. And we believe we're about to go downward on the cycle. Ooh. Now, if you get a loan officer with nothing but commission breath, every time 50 basis points goes down, he's going to say, hey, I think it's time for you to refinance. And you will refinance. You won't pay any money out of your pocket because he'll build it on the back end of the loan, but it will cost you some money. It will cost you money. And you start the 30-year clock over. So if you're trying to do it strategically, you wait to time what you believe the bottom of the market is. Now, you should be listening to a professional, us, but you should also be watching it yourself. It hasn't even started to go down yet. Hasn't even started yet. We're still at the pause, at the peak of the cycle. The chairman of the Federal Reserve, Jerome Powell, says, we believe the cycle is going to start going down. They start the pivot and then the descent. And then we believe the descent is going to go all the way into the fours. In the fours. Now, if you're in the fours, you have the ability to buy down into the threes.
Woo!
So, if you're doing your forever loan, you go as low as you possibly can. You buy down the rate as deep as you can. It's going to cost you a lot of money. And then that's it. Lock it in. That's going to be your static payment from now on. That's the advice. But does that practically happen? Very rarely. Very rarely.
So you got to save these numbers, Fernando. Adrian, one mortgage company offered me $1,600 cash bounce once closing on a $300,000 home. The other company is offering $5,000 guarantee to seller if we close rather than another buyer closing.
Do you understand that?
No.
Me neither, man. Adrian, we want to work with you, man. We want to help you, but I don't know exactly what you're...
So the first one
sounds like a kickback. It sounds like a kickback almost. Kickbacks are illegal, by the way. We don't do them.
So I think they're saying, hey, if you buy a $300,000 house, we can get you a $1,600 credit.
Okay.
I think that's what they said. So the wording's off. I'm guessing.
All right, no worries. We're here for you.
The company is offering $5,000 to seller. That's where it gets weird.
Yeah.
So yeah, clarify the questions, man. Maybe we can find an answer for you. Minerva, my lender went from 6.7 to 7.6. He said rates changed.
They did. That's a bit of a bump. Let me tell you a real life scenario that I dealt with recently. I have this deal I'm closing. It's an engineer, high money, high earning, makes way more money than he needs to pay the monthly payment. And I quote him at 6.5% with a little bit of a buy down, 6.5. And he says, Lee, that's 6.5. Can you tell me, it was time to lock the rate. He says, can you tell me what the better move is? And I said, yeah. And you're an engineer, so maybe you'll catch this right away. I said, you got your 6.5, and we can lock you in that, and it'll cost you a little bit, and it's not bad. But because of your situation, I would strongly recommend for you 7.625. Without blinking, he said, all right, Lee, justify. And I said, okay, your 7.625, instead of costing you, call it $3,000, is going to actually give you a credit of $3,000. So you're going to get a credit. Now you have $6,000 more in your pocket that you didn't have. Now here's the key. Because we're at the peak of the economic cycle, according to the Jerome Powell, the chairman of the Federal Reserve, and we anticipate interest rate reductions, 3 at least, as many as 6, according to Jerome Powell, chairman of the Federal Reserve, there is no question whether or not you're going to refinance. Whether you're at 6.5 or you're at 7.625, there is going to be a refinance in your future. Now, the only question is it a strategically sound situation? Now, with your $6,000 a month, let's say it costs you $100 more a month for this payment, because the difference between 6.5 and 7.625 was about $100 in that case. You have 60 months to break even. 5 years. I strongly believe we'll be in a very low interest rate environment within 18 months. And he said, I share your belief, Lee. I watch the markets. And your math is sound. Please lock me at 7.625. And I said, yes, sir, no problem. I hung up and I said, wow, I don't think I've ever had that conversation that fast in my life. But because he was an engineer and technical, he absolutely understood the numbers and he understood where the market was going and agreed with me and locked at 7.625.
Nice.
The average person is going, I'm going to lower rate, and you'll buy down to the lower rate, which is stupid if you're going to refinance in the next year.
Sweet. So Afraid Researcher says, what effect does LexisNexis have on your chances of buying a home?
You go.
So here's what you're looking at, Afraid Researcher, is you're looking at a service that looks to see if you have other debt like liens, taxes, that type of stuff. So if you have troubled issues in your past, they will come up through. That's a service that banks use. A service. There's others, okay? So if you don't have a challenged past and it's actually pretty clean and you know you don't owe taxes, or that guy over there that put a lien on you because he put a pool in your backyard years ago, you know, that kind of stuff. As long as you don't have that stuff, you're gold, man. If you have those problems, come to us. We'll do all the due diligence up front so you don't get into contract accidentally and lose it at the end. So we got your back, man.
By the way, there's something that happens. People go to a credit repair agency and they'll say, hey, listen, I've got child support, but I'll pay the credit repair agency to get rid of it. So they'll erase it. Well, they think they erased it. Well, what they did is they got the credit reporting agencies to stop reporting it, but it didn't get erased. And on the back end of a loan, we have many, many things. We have what's called an SI, that statement of identity. Things that Chris and I don't even do because we're the loan officer. We're the front of the loan. But once it gets to a certain phase, they'll do an SI. They'll do CAVers. They'll do a whole bunch of different reports that we don't have access to. The one that catches me occasionally is a client will hand me this tax return. It'll say, hey, I make $120,000 a year. I have every reason in the world to believe them. So we start a loan, we get them through the loan process, and when they start the initial disclosures, they sign what's called a 4506T, which is the right for us to pull from the IRS the transcript. So now, what you gave to me, the loan officer, I gave to the underwriter. The underwriter goes, okay, cool, I'm seeing $120,000 a month, but the 4506T says $50,000. These don't match.
Dang.
Does that happen?
Busted.
Yes, it does.
Straight
I don't even know what happened.
busted.
I just get a phone call from management going, hey, you know that Jane Doe loan you were working? Yeah. Well, I can't tell you why, but we're not going to be working on it anymore. And I just like,
Is she going to prison?
thank you. And that happens. It happens. So here's a simple rule. Don't try and cheat the system. If you've got child support, let me know. I have ways to deal with it. We'll figure it out. We'll get you into a payment plan. If you have something that you think is erased, like a bankruptcy, if you think that bankruptcy was erased a year ago, it's still there. It may not be reporting on the credit agencies on the front, but when we do an SI or when we do CAVers report, or was it when we just brought LexisNexis, there's a bunch of different services that banks pay for to find these liens, and they find them.
Yeah. Married 2024. How do you get a credit score up if you paid your collections off? Husband's number is at a 542. She corrected it.
Okay. So the quickest way, it's actually a credit hack. So let's say you're at 542 and you say, hey, you know what? I really want to get this credit score up. I really want to. Man, this is important to me. You go to your mother or your father and you say, hey, mother of mine who loved me so much for so many years and has an 800 FICO score and pays all her bills on time. Can you add me as a owner or authorized user on your credit card that you've had for the last 20 years that helps you get that 800 FICO?
Oh, since you put it like that.
And I will love you forever as your child.
Dang, that's a good job on
Yeah.
the child.
And then mom says, why, yes, child.
Is that what
I
you
will.
You?
Yeah. Well, yes, child.
Child.
Well,
Child,
yes, child.
come here.
I will add you to my credit card. And you can, and then you say, hey, mom, mother dearest.
Mommy dearest.
Mommy dearest. I don't even need to have the credit card. Once they mail it to you, just trash it. I just need the credit. Now, as long as your mom had a good FICO score, you're going to absorb the history. That's more important than the FICO score because credit has no memory. It doesn't remember that last month it wasn't there. When we pull it, if it pulls and it shows 10 years of reporting history, you now have 10 years of paying your bills on time.
Boom.
That's a credit hack to get your score up pretty darn quick.
All right.
Yeah. Side note, make sure your mom has a good credit score before you do it.
Make sure she likes you.
If she,
Because if she don't, she probably won't do it.
yeah, she probably won't do it.
Can
You think your dad will do it?
Dude, my dad?
Yeah. Like,
What's
call
his
him
name
up.
again?
I don't know.
Figure out his name. I'll call him and ask him.
I'm like, hey, can you put me on your credit card?
We are blessed with the presence of greatness, everybody.
Uh-oh, who do we got?
Greatness in the
What?
house.
What?
Greatness. Her name is Karen Dazal.
Oh, Kate Daisy. We call her Kate Daisy. Been
We
working
do.
with
We
been
do.
working with Kate Daisy for years.
We do.
Top badass realtor in
Look what she's coming
Arizona and California.
She's coming with
Badass
value.
realtor. Okay,
coming
cool.
with value out the gate.
I have sellers fill out the SI at the listing appointment. Dude, that's awesome. That's awesome.
And should she have buyers do it up front as well? Hell yeah.
Yeah.
If we could
why
do that,
not? Yeah.
hell yeah.
Actually, if we know the problems that are going to come up, then we know. And we usually ask, like, say, hey, are you delinquent on any federal debt? What's that, Lee? IRS debt? Do you owe the IRS any money? Maybe student loan debt? Maybe something that you made disappear? And they usually tell me. And then, are you legally married? Very important question. I just used to say, are you married? That was stupid. I didn't know that, but it was stupid. Because I'd get into escrow and I'd say, yeah, you said you're married. Yeah, we've been living together for 10 years. All right, cool. Where's your marriage certificate? Well, we never went to the state or anything. What? You never went to the state or anything? No. So we're not, well, I guess if you put it that way, we're not legally married. In the middle of escrow. I
Damn.
can still pull it off, but it's a pain.
Everybody's like, it's my wife. We're like, well, it's my wife.
Yeah, don't worry about it.
Anyway, so what Karen Dazal is talking
Yeah.
about is addressing what the afraid researcher was asking. So getting
Mm-hmm.
an SI, statement of information, it's going to pull some of that data that we're looking for too to see if you don't qualify or if we need to solve something before you get into escrow.
Yep.
So good job, Karen Dazala.
We're here for you.
Heck,
We're here for
yes.
you.
Okay, so there's a lot more questions here, guys.
Yeah,
so
we're
just
trying to
hang
keep up.
tight. We'll get to all of them, okay?
Dude, we're going to have to speed
So,
round soon
all
because
right,
we've been doing this for a while.
Dude, we love this.
I
Daniel
know.
Cash says, do you guys do flip loans and do y'all do what we need to qualify?
Do we do flip?
Broker, yes.
Yes.
Broker, yes.
Easy enough. Yeah.
And yes, we'll help you.
Guess we'll help you.
Andreas Apple, 60K down payment will get me a fair monthly payment and interest.
Depends on your purchase price. 60K down payment is only one of the factors. If your home price is $80,000 and you're putting $60,000 down, pretty good payment.
And its initials are AA.
AA. Andres Apple.
someone
Dig
needs
that,
help.
man. That's pretty cool.
Ryan, can Jerome Powell do something under the table and get me a 1.5?
I
I like the way you think.
Yeah, I like the way you
Millie
think.
Triado, what can I want with a FICO score of 804? What can I buy with a FICO score of 804?
Millie, you can get almost anything you want. 804 is like the top of the game. 780s, anything above 780 is going to be perfect.
Technically, Ryan answered your question. Nothing. Because we
Nothing.
need money.
We need money, money.
Money. How much do you
Money,
make?
money,
Figure
money.
that out. Cheech and Chong of the mortgage world.
Yeah.
Who's Cheech?
Who's strong?
KDZ.
I don't know.
Millie,
Who's up?
Ryan, nothing. What do you mean? He's joking with you.
Yeah.
Chris and Lee, can I be authorized on your credit cards?
I don't know, man.
You
I
can
don't
get
know.
on Lee's
I
all
don't
day
know.
long,
All
man.
day long. I don't
all
know,
day,
man.
every day.
I don't
He has
know.
a lot of them, too.
Dude.
He's got that grandpa money.
Cool. Adrian, this information definitely helped me. Appreciate you, Adrian. We're trying to help you. If, by the way, if you're a loan officer in here, we appreciate you showing up. We thank you. Much respect if you're making it through this market. It's a very difficult market. If you know more than us, please chime in. Give us some education. If you don't, sit down, son. You might learn something.
Wow. Sit down. You might learn something. So, Adrian, you got to give us a buzz, man. We'll definitely help you. He's been pre-approved for 3 to 4, but you guys need to get the benefit for yourselves. Give us your loan estimates. Let us beat the numbers that everybody's giving you.
Yeah.
You guys become the winners. So you can just text us or you can send us an email with those loan estimates. And yes, we will get you guys better deals
I
if
think
possible.
we ran the numbers. We get 1 LE a day, I think. I think you said one a day.
Range, yeah.
1 LE a day of somebody saying, hey, is this a good deal? And we can just go through the numbers in probably like 3 minutes and say, that's pretty good. I can't beat it. Or I can smoke this. And then we have to go through a long conversation. How much time do you have left in escrow? Are you ready to switch? There's a whole bunch of stuff. Here's how much it'll save you a month. Here's how much it'll save you overall. You make the call whether or not you want to do it. But if we have the locked LE, because if you tell your loan officer, I want an LE, he knows exactly why you want the LE. Nobody knows to ask for an LE unless you're shopping them.
Yep. And Billy wants to know what's the process with refinancing your mortgage.
It's real simple. We just figured out where you're at and see if it's a good idea to refinance. It's pretty simple. It has to save you. There's something called an FHA Streamline. If you're an FHA and it just lowers your payment, it's actually a very thin loan, meaning it doesn't cost you a lot. I don't have to do appraisals. There's a lot of stuff. It's real easy. But the only way you do an FHA Streamline in this environment is if you bought about 7 months ago at 8.5%, because Streamline has to be a better rate than you already have. And right now, mortgage rates 5.75, I think, 5.75. New American Funding is putting out today's 15-year conventional 5.75, 30-year FHA 5.875.
He's not looking at the screen. He remembers this.
I remember, honest. Yeah.
Can you give me a reverse mortgage at 26 years old?
No.
We could definitely get your grandparents one, though. Have them call us. Devin Rios, what's the market rate right now? 600 credit, $400,000, $20,000 down. So he just gave it to you.
Yeah, 600 credit's going to hurt you, though. That credit score is going to hurt you a lot.
Never mind, he didn't give it to you.
Yeah, that's going to hurt you a lot.
It's going to be a little different.
Yeah.
Rachel Bailey, how would I know if I can qualify if I cannot have the PMI on our house equity we have? Appraisal? Okay, so how do you remove the equity?
You do that. You go that way.
Okay, so here's how you do it. The banks, if you want the bank to just remove it after you buy, as long as you have a conventional loan, that's Fannie Mae, Freddie Mac, and if you don't know, we can look into it for you. Mm-hmm. So you buy it for $500,000. Okay, they want to see you pay that loan down 20% or more, which means you need to have that loan balance down to $400,000 or less, and then you can say, "Hey, bank, can you remove that for me?" But once it gets to 78, that's less than 80. Okay, probably around 380,000 that you would owe. It'll automatically fall off. If you have FHA and you got it after 2014, it'll be on there for life.
Unless you put 10% or more down. Unless you put 10% more down.
That one little asterisk, unless you put 10% more, it'll fall off in 11 years.
Yep, it'll fall off in 11 years.
So if that's confusing at all, just reach out to us. We'll explain it again.
Yep.
What's the process when you refinance your mortgage? Okay. What's LE stand for?
LE is loan estimate. It's actually a legal thing that got instituted by the Dodd-Frank laws, and that is so that there was, when the mortgage crash happened, loan officers were really taking advantage of clients because it's really hard to understand this stuff. And LE is the legal paperwork that says this is what we estimate your costs, fees, and rates to be. Now, loan officers know this, so they will give you a floating rate, which means all the numbers will change based off rate. So they'll give you a rate, and the LE will say in big, bold letters, this rate is not locked, it is subject to change, which means everything you gave me is bullshit. Everything you gave me is going to be a rough estimate, and it's been skewed to help the loan officer. But if you give me a locked LE, it will say, this is locked and will not change. At that point, I know exactly what I'm fighting. And then you either have an amazing deal, and about 30% of the people that come to us, we're like, can't beat that. That's good. You locked in at the right spot, the right situation, whatever. About 30%. About 50%, we're like, we could smoke that. about 20%, we can fight it. So there's, yeah,
Rachel Bailey, and I'm gonna add one more thing.
cool.
Let's just say that you're not paid down to 400,000. You don't have that 20%, but you
Okay.
know you have the equity. We could do a refinance. We would just refinance it for you, and then you will take off the MI and hopefully put you in a better situation. Couple more questions, then we gotta go, guys.
Cool.
Do you guys do USDA? If so, what credit score do you need, and what is required?
USDA, yes, but USDA is geographically driven. You have to go to USDA.gov, put in the address of the property that you're thinking about buying, and then USD will give you a thumbs up or thumbs down. It was green or red, actually.
And
And
580
then,
credit score.
and whether or not we can do them, you have to subscribe to what's called GUS, Government Underwriting System. It's a different process, but yes, we can do the USDA loan for you.
And Peach hasn't found a house yet.
What, Peach? We want to help you.
Keep shopping. It'll be there.
Yes.
You ready to bounce, man?
Yeah, you know what? We've been Chris and Lee. We appreciate you. We're going to get you a house in 2024.